Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today is the 22nd of May, 2023, guys. So, welcome everyone. Welcome to this Monday's morning session. Now, in this session, we're going to have a quick look at the markets, a few of the charts, the usual stuff. Before we do that, we go there. Let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here from that little corner in the left, and I'll come back in a few bits. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. You can check out our deals here, what we have, and if you have any questions, you can always reach out to us, even me, for any more questions, guys. So, right, now then, let's jump into the charts. And in general, let's see what this week has prepared for us. Well, we do have somewhat of an eventful week, I would say. Not maybe much, but, on the economic calendar, but still a few events that could, give us some nice movement here. Yep, that could happen. Now the main topic, of course, which I want to mention is the whole debt ceiling. Right? Okay, this another week, another chance for them to kind of do something, but I think that everything will drag into Friday. Maybe even it will drag into the beginning of next week. But basically, they need to kind of reach some sort of a deal maybe by the end of this week. But again, we'll continue monitoring the show because I cannot call it anything else. But we'll continue monitoring that. So the only thing is, guys, just kind of stay cautious, be careful, and try to position yourselves accordingly. Now, so looking at the picture here on Nikkei 225, and look at the spectacular movement here. So basically, I said to you what I said to you previously, that if we do clear this highlighted territory, which is roughly between the 30,663 and 720 levels, well, and we stay above it, then yes, further upside is possible. We did clear that 31,000 mark as well, and we're currently sitting above it. I'm looking at the futures market here. The question is, how far can we go, without retracement? And to be honest, for this, I think I need to zoom out here a little bit and maybe even jump into a monthly chart. So the information that we have here, and basically, yes, we are kind of forming this all-time high here. And the question is, can we stay here? Well, look, this is a monthly candle, right? And we have cleared this territory, this key important zone. We went for a higher high. My question is, can we, because we still have this week, and we still have like a few days next week for May. The question is, can we see maybe this one drifting back down and maybe, closing below this key resistance barrier? Now, if we get something like that, then this is where it could make a few more bears a little bit more happy, and we could see a nice correction here back to the downside. So just kind of keep that in mind. For now, like I said, we are trading above this territory. If we can, let's say, drop and stay below this, then this is the point where I will start shifting my attention towards some lower levels. And yes, we could then maybe go for a nice correction here back down towards that psychological 30,000 mark, or even a little bit below that. So again, a lot will depend on what's going to happen with the whole U.S. saga, the whole debt ceiling issue. But yeah, for now, I think that yes, the market is anticipating a good run, but the Nikkei in general is enjoying the moment so far. So a good activity, but of course, everything kind of comes to an end at some point. So I'm not trying to be the that big pessimist or something like that. No, but look, tomorrow morning, for example, we do get the preliminary manufacturing services and manufacturing and services PMI numbers from Japan. So and also the BOJ core CPI, the preliminary one. So that could be quite an interesting moment to see if those numbers will do give any kind of, let's say, either boost or maybe will shaken the index here, the Nikkei 225, or maybe it will go all the way towards Friday, because on Friday we do have the Tokyo core and headline CPI numbers coming out. So those are expected actually to, well, it's a little bit of a shift. So the core one is expected to decline a little bit from 3.5 to 3.3 plus I'm talking about. But the headline one is expected to rise from plus 3.5 to plus 3.9. So let's see how this is going to play out, guys, because again, for now, it's just one-way traffic to the upside. However, I do understand the temptation to go short here at some point, maybe for just a little bit, but look, we did not get our signal yet, and that's why I'm just observing this one for now. I mean, if you missed this rally from here when I talked about this, then okay, look, just I would say leave it for now. Even if it does have a bit of room here, more room for the upside, I don't know. It's like at this point, I think that it could fade out a little bit. So we could see another burst to the upside, but maybe a retracement back down could be possible. However, what I would like to see here is a drop below this highlighted territory right here, just to be a little bit more on the safe side. So ASX 200. Okay, this one's a little bit on the modest side, of course. We are kind of, keeping a close eye on this one. There's not much data coming out from Australia this week. Also, yeah, the preliminary services and manufacturing PMI numbers, but I think that this will kind of follow the lead from the US, I think, mainly. So yeah, we'll stick to that. But in general, from the technical perspective on ASX 200, I mean, it looks quite interesting because, look, we do have a downside line taken from the high of the 17th of April, which in a way is still providing that good resistance. This level here, the 7,300 territory, I spoke about that previously, but I have to admit that it didn't really work out well. So I think that what's better here is to maybe just mark this barrier, the high of last week, near the 7,315, and if we clear that one, this will confirm a forthcoming higher high, and yep, may attract a few more buyers into the game. Now, in terms of the downside, well, this is what I'm drawing right now. We have this upside line, which in a way could play out. This level here, the 7,200, I think I will get rid of it, and I'll put it here. I'll mark this level, the 7,215. So basically, if we do fall below this upside line and below this 7,215 territory, then yes, I will get a little bit more excited with the downside. I'll aim for this 200-day EMA or maybe even below that. So long story short, for now, we are just observing the price action. We're stuck in here in this kind of veg kind of triangle pattern, something like that, or in other words, we're stuck between the trend lines. So in order for me to kind of consider the next short-term directional move, we need to see a clearance of one of these lines. Nifty 50, guys. This one's a little bit has a mind of its own. Now, I've talked about this upside line previously, and I said that if we do break below it and then we stay below the 18,267, then yes, I'll aim a little bit more towards the downside. Well, I did initially, and then look at this, what happened here. We drifted lower, we found support somewhere around this territory, and around this 18,075, and then we rebounded and pushed back up. Now, let me just clear up some lines here. This one has to go. This upside line also has to go. I think that what we will do now is we'll consider a possible head and shoulders pattern, where the neckline being around here. So if we do drop below this 18,075 territory, that's from where I will consider a bit of a move lower here. And yes, more sellers could join in if we do get a nice clearance of this little territory right here, guys. Let me just highlight it a little bit more. There we go. So if we do drop below that area, yes, great. More, like I said, more sellers could join in. For the upside, I'm taking a very conservative approach here, and I'm going to be watching this little territory right there, this 18,483, 519 levels, approximately around here. It provided a good resistance recently, so hey, why not just stick to it and just observe it and just keep an eye on it, basically. So yeah. Now then, jumping into the US indices, guys. So NZDUSD, which is on our chart here, is Nasdaq. So looking at the futures here on Nasdaq, what can I say? Look, we are trying to go higher, and so far I'm sticking to that rule that look, I'm getting my clearances here, because previously I said to you that if we do push above that 13,500 territory, I'll go a little bit higher. I'll aim for that 13,740. Now we cleared that as well, and we made our way towards that 14,000 mark. Now look, what I want to do here now is actually get rid of all the drawings and just have a fresh look at it, because in a way this has to be done on an occasional basis. Now some levels will work, some won't, but I think that yes, we need to just redraw everything and start fresh. First of all, let's establish the trend. That we have the trend here and it's working so far. We also have a shorter term one drawn from the low of the 13th of March. The bigger one here is the medium term one is drawn from the 6th of January of 2023. The shorter term one here is drawn from the low of the 13th of March. So okay, so far so good. We're above all of the EMAs as well, so everything's looking quite nice for the bulls, of course. Now, given that we have reached an all-time high, let me just grab a Fibonacci. We've reached an all-time high back here, back in November of 2021, and then we drifted lower, and we found support. Let me just extend this a little bit to the right. Yep, prices, there we go. So we have found support somewhere around that 10,000 kind of 500 zone, and then from here we started shifting higher. You know, we started forming these higher highs and higher lows, and so far if you see this, you can see that we've cleared the 50% retracement here. We pushed above it, so now it's kind of opening the path towards that 61.8% retracement. Now, will we reach that? Okay, let's wait and see. It's a good potential target. Look, we've cleared this important zone right here. This one right there we go. This 13,740. We cleared it. So now the question is, can we go further north and test the 61.80% retracement on the Fibonacci? Well, this is what I'm going to aim for. As long as we stay above the 50-day, sorry, not the 50-day, but the 50% retracement on the Fibonacci, and until we stay above this upside line. So as long as we stay above all that, then yes, I will aim for that 61.8% retracement on the Fibonacci here. So let's see if that's going to work out or not. In order to go lower, well, a drop below this territory is required, and then that's where the interesting bit could come in, because then we could start shifting our attention towards lower levels, maybe towards that 38.2, which is bang on, perfectly sitting together, coinciding with the upside line here. So again, let's not rush into anything, but these are our options, and these are the ones that we're going to consider. For now, I am leaning towards the upside still, but again, don't be surprised, for example, if this is going to be, let's say, a bit of a roller coaster ride. Maybe we'll see a decline here, a correction to the downside, and maybe if we do stay somewhere above this territory, maybe above that 13,740 zone, maybe this will form a nice bullish flag, and then yes, we could, this could attract more buyers into the game, and we could see, this one pushing to the upside. But again, let's not rush into anything. Let's see how this is going to play out, and then we will go from there. Sorry about that. I needed a sip of tea. Look, again, with the whole debt ceiling, in fact, the fact that it's we're trying to they're trying to reach it till on Friday, till Friday or something, or like Friday is kind of so-called kind of deadline or something. But like I said, this week could be a bit of a roller coaster ride. So we could see, some up and down movement, and maybe, again, depending on what the outcome will be, then that's when maybe the market could establish here a more clear direction. But at this point, I think it might just be subdued a little bit, unless it starts pushing above last week's high, this 13,960. If we clear that, guys, this will confirm a forthcoming higher high and potentially could attract more buyers into the game. The Dow Jones Industrial Average. So this one's also a little bit on the boring side. Well, actually, this one's actually more boring than Nasdaq. Nasdaq is a little bit more exciting. This one's a little bit on the boring side. We're still kind of oscillating around those EMAs. In general, we broke this downside line. We did push higher. We pushed above my target here, the 33,562, but then we failed to stay above it. So in a way, I would say this level has to go, no longer needed. And I think that this is the one that I'm going to keep an eye on, the 33,732, and then we will take it from there. In terms of the downside, I would like to see a drop below this 33,000 mark, somewhere around here, and then go lower. So then, looking at the picture here, let's say in order for me to go higher here, yes, I would like to see maybe a push above this territory, just for that extra confirmation. Oh, by the way, I wanted to have a look at the CME FedWatch tool. Oh, there we go. Look at this, guys. We've dropped all the way to the 8% mark. So basically, it seems like, no expectation for a rate hike during the June meeting is sitting there. So again, okay, fair enough. Let's wait and see. But most likely it could stay like this. I mean, there won't be any rate hikes, going into kind of June meeting. But again, as I said before, look, we have still the PCE number that's going to come out, I think, on Friday, if I'm not mistaken. Let me just quickly double check that. The Fed's beloved inflation gauge. So yeah, let me just double check. PCE, there we go. Yes. So that's going to be quite interesting to see what's going to come out. Then we'll have still job numbers coming out before the meeting. Also, at the moment, the percentage why it's dropping like this, because again, there's like these talks that there's possibility for a default, and the US and blah blah blah. But hey, I mean, what's the chance of that happening? I mean, that's a little bit tricky. Unless it happens, I mean, that could bring the market really, really down. But hey, I think that the US will not take that burden, will not carry that burden, and they will try to they will try to find something else, to bring the market down, but not this way. But look, for now, the market is just enjoying the moment, and yes, we might see maybe, like I said, maybe a little bit subdued kind of activity in here, but let's say if on Friday or something, or when they reach the deal, this market could explode nicely to the upside, and yes, this could be seen as a positive. But then this is where the Fed could come in and say, hey, you know what, the market is way too high. We're bothered about inflation again, and let's bring interest rate hikes back to the table. Okay, we can speculate here a lot, but for now, that's the game plan. So let's see how this is going to play out. Of course, like I said, there's a lot to consider, but at this point, from the technical perspective, this is my game plan, which I just mentioned. S&P 500, guys. The situation here, I would say it's a little bit tricky. The technical picture is really like annoying me at this point here, because look, I talked about this 4,200 territory. I said that if we clear it and we stay above it, then yes, I'll lean a little bit more towards the upside. So yeah, we did push through it, and but then we kind of pushed higher, but then we broke back down. Look, in general, at the moment, we are still above that 4,200 zone. So if we can stay above it, then yes, I will stick to the upside, aim for the 4,327 territory, and then we will go from there, guys. If suddenly the index starts falling back below the 4,173 territory, somewhere around here, then I'll consider a bit of a retracement back to the 50-day EMA. The German index, DAX, look very quickly on this. Okay, wonderful, great. Look, we cleared this barrier. Look, I have been waiting for this one for a month now, and finally we did that last week. Yeah, we reached my target, the 16,294.95 territory. We cleared this as well, and we're still sticking above it. Now, the question is, can we continue trading above that area? Well, let's wait and see, because at this point, yes, we are looking quite positive in general, but this is where I would like to bring everybody back to ground, because in general, we are hitting an all-time high. And let's see how this May candle is going to end, because we're currently above that key, resistance territory, which we've cleared. But now the question is, can this whole thing here form something of a double top? Well, that would be a very interesting idea. However, until we get, like, let's say, a confirmation drop here, and in general, you need to see a breakdown of a neckline, right? And in this case, the neckline is a little bit tilted, so something like this. Now, maybe some of you might say, maybe this is not actually a double top here. Maybe it's actually a nice, beautiful channel. And if this is the case, then we do have some room still for some upside. So basically going all the way here towards that maybe 16,700 territory, somewhere around there. And if that's the case, well, brace yourselves for more upside. So, long story short, from the shorter term perspective, I'm keeping an eye on this hurdle here, this 16,295 territory. If we drop and stay back below it, then yes, I will consider maybe a bit of a retracement here, something like that. But again, but not maybe that as significant as this here. Still, there's a lot of factors to consider. There's some upside lines which I'm not going to touch yet. Let me just clear up this chart, actually. Let's remove some of these. No, I'm actually going to keep some of these in here. But for now, look, if the kind of, the whole positivity kicks in again, because if, they reach that ceiling, then we could see this index traveling further north. And then, yes, like I said, keep your eyes on that 16,700 territory, somewhere around here. Maybe that could be a nice target if this could be seen as a nice rising channel pattern. Or if some of you might say, hey, but maybe this is more of a double top. Okay, look, we could consider that if, let's say, this monthly candle suddenly drops back down and, falls back below that 16,000 territory, and that's where some nice negativity could come in and there could be a nice feast for the bears. But let's not rush into anything, guys. For now, we are above our key resistance barriers around here, so that means that we will stick to this little territory for now. Just continue observing it, and if we can, if we stay above it, then yes, I am aiming further north. USD, US dollar index. So in general, mission accomplished on this one. Beautiful tests. I'm not going to spend too much time on this, but basically I'm taking a very simplistic approach on DXY here. So if you remember previously, I talked about this highlighted zone right here. This 102 territory. I said if we clear it, I'll go higher. My next target will be the 100-day EMA here, shown as the green line. Tested, cleared it. Then I said that my next target is going to be the 200-day EMA. We tested the area near that, and we drifted back to the downside when we're it seems like we were willing to test the 100-day EMA from above. But look, let's wait and see. Let's see if this happens and if we can get like a nice rebound or something. Because right now, if you're a little bit on the cautious side, probably the best option is to keep an eye on the current highest point of May near the 103.49 level, something like that. Or in a way you can round it up to 50, and at the same time we could break the 200-day EMA and travel further north. So let's keep an eye on that one. But yeah, for now, long story short, I am keeping a close eye on some of these barriers here. Let me just get rid of this. Not really needed. So yeah, I'm keeping an eye on some of these levels and barriers. So if we suddenly start falling below the 100-day EMA, guys, I'm aiming for the 50. Simple as that. Gold. Last week it was a bit of a roller coaster ride. Look, we drifted heavily to the downside. We've moved nicely lower. Look, in general, my idea here worked out. I said to you previously that if we drop and stay below this upside line and below the 50-day EMA, I'm leaning towards the downside. My ideal scenario was to aim for the 100-day EMA here, but hey, it's never the exact level, guys. It's always the area near that level or near that line. So just we take it as it is. If it's let's say not going further, then just take your profits. Okay, that's fine. Don't be greedy. Now what? Now what's next? Well, the fact that we're still staying below this downside line, that's of course bringing those bears back to the table. Or sorry, not bringing them back, but keeping them still at the table. As long as we stay below the 50-day EMA as well, then that's all supporting the downside scenario. So in other words, this arrow, not this one, but where's my arrow here? This arrow has to be drawn somewhat like this. So as long as we stay below this downside line and below this 50-day EMA, I am leaning towards this 1950 territory or this 100-day EMA. And then we'll maybe take it from there. Maybe we'll see, a nice good drop right here. Let me just shorten this up a little bit. So maybe we'll, get ourselves a nice test of this upside line. But hey, let's not rush into anything for now. Let's keep an eye on it, and then we will go from there. Silver, very quickly on that one, guys. Silver, similar story like with gold, but this one, it's a little bit more bearish than gold, I would say. But nevertheless, still could present itself with nice opportunities. So look, if you want some downside on this one, we're near a key support zone. We're oscillating around that 100-day EMA. So all that is playing in nicely and providing support. But if we do clear this little territory right here, that may not to mention the 100-day EMA, which is shown here as the green line on my chart. If we clear that one, great, okay, but that would be the first step for some lower levels. But if we start dropping below this territory right here, this 23.53 zone, approximately around here, now that's where it could become a little bit more interesting and for the sellers, and this may open the door towards lower levels, like for example the 200-day EMA or this 22.83 territory, somewhere around here, guys. Now let's jump into oil. Look, I'm not going to spend too much time on oil because I said the same thing last week, and I'm just going to stick to that. but basically I'm just observing these two levels. I need to see a clearance of one of these areas right here, either the 74 territory here for the upside or the 69.43 level for the downside. Now, maybe the downside scenario level here is not the most attractive one. I think that it could have some issues, but the upper side here is a little bit better. This 74 territory is something that I'm keeping a close eye on. At the same time, if we clear it, we would jump above the 50-day EMA, and we could aim for that 100, 200-day EMAs. Now, another thing that I want to confuse your head with is is this upside line here, taken from the low of the 4th of May. Now, as you probably can see yourselves now, this could be a possible ascending triangle pattern. Now, according to all the TA rules, these patterns tend to break to the upside. However, still, we have seen this happening in the opposite direction, and that's why still a confirmation break above a barrier here is required. So a clear break above the upper side of the of this potential idea of a triangle, of an ascending triangle, yes, is still needed in order to go higher, in order to get comfortable with the upside. But given that we're currently stuck here near this upside line, which is the lower side of the potential triangle pattern, that of course raises a few concerns. Maybe we'll break that, and if we break that, we move lower, test this 69.43, rebound from it and push back up, then yeah, ignore the whole kind of triangle pattern. So at this point, I'm going to draw it, but I'm not putting too much emphasis on it because the way the price structure looks here, it's not the most clear triangle ever. Ethereum, let's jump into a few cryptos. Look, we're stuck, I would say we're stuck between the 100 and the 50-day EMA. So if you are looking for some lower levels, guys, there is some potential. And look, last week I've mentioned this, and I have drawn this in a different way. Because what I wanted to show you is that, look, from around mid-April, we have been drifting lower, and within this somewhat of a falling wedge pattern. Maybe not ideal, but still sticking to that for now. According to all the TA rules, falling wedges tend to break to the upside. However, we have seen this happening in the opposite way. So that's why if you want to consider the upside here, probably a break of this upper side of the falling wedge would be required. Now, from the shorter term perspective, as long as we remain inside the pattern, there's still downside potential. And in this case, look, we are still hovering above this 1785 territory, somewhere around here, but in general we're stuck in between the 50 and the 100-day EMA. So in order to go lower, probably the 100-day EMA is the better line to watch, the better entry point maybe. But again, you would have to kind of be careful because of like something like this, like where we have a false breakout, and then yes, it just kind of takes out a lot of traders who are, let's say, bearish, and then they're very happy it's breaking in their direction, but then it actually at the end of the day it reverses back up and takes you out, and then you feel disappointed. Sorry, I have a bit of tea in my tea leaves and my tea, so apologies. Yeah, I got stuck here. But look, for now, for me, at this point, from the shorter term perspective, this looks a little bit more bearish than bullish. However, if we start clearing the upper side here of this falling wedge, great. Another option is another thing that can support the upside scenario overall is the fact that we're still trading above this upside line, taken from the low of the 22nd of November of 2022. Yeah, we're still, above it, but from the short-term perspective, what we're seeing right now, let's say if we do see a drift lower, this could be, classed as a temporary correction before another possible leg of buying. So just keep that in mind. Litecoin. Yeah, beautiful. Look at this the bearish 3 scenario, or the bullish 3 method, or something like that. So basically, I always get these two confused because they're quite similar. But what I'm talking about here is, let's say when we have like you know, a correction of some, in this case, for example, here to the upside. The bodies of the three candles are kind of similar, and then they're within the body of this first candle, the stronger downside one, and then the fifth candle tends to break in the direction of the first candle. So this is that typical bearish 3 method. Let me just double check this bearish 3 method, because again you always get confused. Yeah, that's the bearish 3 method. So you always get confused with the bullish 3, no, the falling 3 method. Yeah, the bearish 3 method, the falling 3 method. So they have like a few names. So yeah, guys, go figure. In general, you can name it whatever you want. The only thing is that the principle stays kind of the same. So when you have, let's say, you know, a decline, let's say in this case, a decline like this, and then you have a correction to the upside, but the bodies of the bodies of these candles are still within the body of the first one. So the fifth candle tends to break out to the downside. But okay, like I said, this might not always work. So in general, nothing is guaranteed, but you know, you need to kind of run this by we need to run this by you guys. But anyway, look, for now, what do we do here for now? I think that the time has come to remove some of the lines. Now, probably the easier option is just to remove everything and just kind of start fresh. So first of all, I'm going to bring this upside line back to the table here. Okay, so this could be a nice upside line here to consider. Then at the same time, actually, I'm going to draw this downside line as well. So let's see if this is going to carry any significance or not. Now, we did drift lower. In a way, there is potential for this one to move further south, but what I'm actually considering here is the fact that we are above all of the EMAs right now, so maybe something like this could be possible, because if the EMAs continue to provide support, then yes, a bit of a retracement like that, you know, a rebound back to the upside could be possible. If that's not convincing you, let's say, to jump in, then maybe you can keep an eye on this barrier, this 94.97, or in general the 95 zone. If we clear that, then yes, this will confirm a forthcoming higher high and potentially could drag people drag you know, the crypto here towards this downside line, which I'm gonna keep an eye on for now. For the downside, probably initially a drop below the 100-day EMA here could be good. Then we'll aim for the 200-day EMA, and if that gets clear, then I'm aiming for this upside line taken from the low of the 9th of November of 2022, guys. Simple as that. I'm not, as you can see, I'm not really putting any levels for the downside yet, because I want to see how this is going to play out with the EMAs. Dogecoin, very quickly on that one, guys. Dogecoin is looking quite bearish. I've talked about this, and look, the downside line continues to provide resistance. So in a way, what we need here now is a nice good drop below the 0.0707 level here. If we do get that, then yes, I will aim for the I'll aim for the downside. And not only that I need to see a nice break here, but also I would need to see the body of the daily candle staying below this hurdle, because I don't want to get a false breakout or something like that. Now let's jump into a few pairs, guys. AUDUSD, look, I've talked about this last week, and I said to you that I'm going to keep an eye on this 0.6636 territory, which we broke, but then we shifted back up, so I can strongly say that I was a little bit wrong with the level here. Okay, that's fine. You know, you're never right, so you cannot be 100% right all the time. So back to the drawing board. So what can we do here in general? How we could approach this? Well, the fact that we are still below all the EMAs here on our daily chart, that's kind of attracting us, or attracting the bears. And I will, no, there we go. Yeah. So I would say, as long as we stay below all of the EMAs, then yes, I will continue targeting the downside. I will aim for the lower side here. This is 0.6564, and then we'll go from there. For the upside, because we're still within the range here, inside the range. So I will aim for some higher levels within the range only, because then there's a different approach, you know, to when we're gonna come, let's say, to one of the sides of this range. But for the upside, probably a jump above the 0.6710 territory, somewhere around here, could be ideal. At the same time, we could fly above the 100-day EMA and aim for the 200-day EMA. AUDJPY, look, so far so good. I've talked about this and I said that if we do clear this 91.32 territory, I'm going to aim higher. My next target is going to be an area near the 92.42 level, which we managed to reach perfectly. Boom, mission accomplished. What's next? Well, now we're seeing a bit of a retracement. Okay, that's absolutely fine, but can we stay above this little hurdle right here, this 91.32, which I previously looked at, good area of resistance? Well, let's wait and see. In a way, for now, what I'm looking at here is I'm looking at the area right. Well, in general, I'm sticking to the upside if we're going to stay above all of the EMAs here on my daily chart. So even if we do fall below this little hurdle, there is still hope for the bulls to step in somewhere around here near the 200-day EMA, and then yes, maybe, you know, the bulls could step in and take advantage of the lower rate and then push it back to the upside. In general, overall, we're still trading in a nice rising channel here. So, hey, so far so good. For the downside, probably the best option here for me is to wait for a break of the lower side of the rising channel here, and then yes, we could consider some moves lower. AUDNZD. Oh, by the way, we do get the RBNZ interest rate decision this week, guys. That's going to be quite interesting. So depending on where you are, I would suggest to check out economic calendar. Either is going to come out at night time on Tuesday or in the early hours of Wednesday morning, guys. I think that's the case. Let me just quickly double check that. Yes, so okay, the interest rate decision, RBNZ, expectation for a hike now from going from 5.25 to 5.50. Of course, let's see how that's going to play out. I think that last time there were some surprises, I'm not mistaken. Yeah, no, that was RBA, that was the Australian bank. Okay, these guys stuck to 25 basis points all the time. Yes, okay. So, but looking at the technical picture here of AUDNZD, look, my this pair is doing everything nicely here. I have drawn this these two trend lines here, a downside one, which I'm still keeping an eye on, but we also broke the upside one. So yep, that opened the door to some lower levels, and so far, look, I'm sticking to the downside. I said to you before that if we do drop below the 1.0623 territory, I'll aim lower. I'll aim for that 1.0588, and then we'll go from there. So far, so good. Looking at, like I said, looking at the picture here, we are below this 1.0588, so basically that's the lowest point of April. We confirmed the forthcoming lower low, and as long as we stay below it, then yes, I'm aiming further south. For the upside, I would like to see maybe a move at least back above this upside line, and then we could consider maybe some upside. NZDUSD, this one's also interesting, so we are still above all of the EMAs here on our daily chart. So in a way, I'm leaning towards the upside here, although my upside scenario is from around this barrier, but that's my ideal scenario. So I would say while we're stuck in here, as long as we stay above all of the EMAs, then yes, I will target the upside, and we'll aim for that 0.6390 territory right there. USDJPY, very quickly on this one. So last week we had a fantastic rally here on Tuesday, if I'm not mistaken. Yep, on Thursday, sorry. On Thursday, we pushed higher, but then on Friday we corrected back down. And what's interesting here, we fell back below the 137.91 territory right here. Okay, that's going to be quite an interesting one. If we do stay below that zone, then yes, I will continue. I will consider maybe a bit of a retracement here to the downside, and then yes, this is where my favorite beloved Fibonacci levels come in, and what we have here, perfect, 23.6. This is what I've mentioned last week as well. 23.6 for fantastic retracement, good hold up here. So this is how you can probably gauge yourself here. And if we do fall below the 23.6% retracement here on the Fibonacci, then kicked something here. Then yes, my next target is the 38.2 or maybe even the 50% retracement. So let's see. For me to consider this scenario, I need to continue seeing this pair getting held by this 137.91 territory, but then also a fall below the 23.6, which is roughly around that 137.57 territory right here. And then yes, we could consider a move lower. Now, if it starts pushing back up here, probably the easier option for the upside is to wait for a push above the 138.75 territory. This will confirm a forthcoming higher high and potentially could attract more buyers into the game. US dollar against the Mexican peso, looking good, guys. Okay, look, we did have a nice retracement here. That's absolutely fine. So we found support around this 17.42 zone and we rebounded back up. Okay, that's all good. But now let's continue monitoring this downside line together with this 17 point, let's round it up here at 90 level. If we continue to trade below it, then yes, another decline here could be possible. However, if we start pushing through this territory, now that's where some buying interest could come in. GBPUSD, this one still cannot let go of the 50-day EMA. And I talked about this and we broke the upside line. Okay, that's great. Can we drift again back below this territory right here? Well, this is what I am kind of hoping to see, because I want to see a drift back below the 50-day EMA, which is shown as the red line here. And if we can get that, let me just get rid of this circle. And if we can get that, then yes, my next target is the 100-day EMA and then the 200-day EMA. I'm just going to stick to that for now, while we're kind of oscillating around the 50-day EMA. For the upside, 1.2547 territory here is something that I'm keeping an eye on. That's my scenario for the upside. So until, I'm going to get that push here above this area, I'm not really getting comfortable with any upside scenarios. GBPJPY is still stuck below this hurdle, this 172.13. Okay, we broke the downside line, so that's fine. This is one of those scenarios where I said to you that, not always the ascending and descending triangles work out. So in this case, we also had a descending triangle and it didn't really work out because we came, close to testing this lower side, and then we rebounded from it and pushed higher and cleared the upper side of the, descending triangle. And we cleared it and we pushed higher. This is what I was aiming for initially, the 172.13. Mission accomplished then. Now, in order for me to go further north, then yes, I need to see a clearance of this territory, and then yeah, we'll go from there. GBPNZD, we're near a key support territory. So look, don't be surprised, for example, if we do continue to trade here somewhere. Let me just double check if we do get any British news coming out. Okay, the preliminary composite manufacturing and services PMIs numbers are coming out tomorrow. Today, not much. Yeah, so let's see if those numbers move, but if they don't, then maybe this pair will save itself for the RB&Z, interest rate decision, and then maybe we could see, some nice activity here. But for now, look, I need a clearance of this 1.9792. If I get that, and if we do drop below the 100-day EMA, now that's where yes, more sellers could join in. Looking at the upside scenario, I think that the better option is to keep an eye on the 50-day EMA for now, in the near term. If we clear that and we jump above it, then yes, I will go a little bit higher. EURCHF, just a quick update. Look, another beautiful falling wedge pattern. So I said to you that while we are within the pattern, there is still potential for the downside. And yep, everything is working according to the plan. We are drifting lower, and now the question is, can we see a bit of a rebound here from this lower side of the falling wedge pattern. Now, if we can, then this would be just a textbook perfect scenario, maybe to consider, you know, a move to the upside, but within the pattern, by the way. Not in general, but within the pattern. But look, I said to you before that this pattern works only until, let's say, you know, the lower side of it, it's not broken. So, but if we suddenly start, you know, falling below this 0.9706 territory, which is the lowest point of March, the same time we could actually break the lower side of this this falling wedge pattern, and that if that happens, then well. Lower levels here could be met, guys, and we could start aiming for, and we could then ignore the whole falling wedge pattern. EURCAD, after we broke this highlighted zone, we drifted lower. I said to you before that if we do fall also below this 1.4585 territory, then yes, a bit of a move lower here could be possible. Let's put it this way. I will still stick to the downside as long as we stay below the 100-day EMA here. If we continue to trade below it, then yes, I will aim lower. I'll aim for that 200-day EMA shown here as the black line. Now, for the upside, I would like to see a push above the 50-day EMA, and then yes, we could go a little bit higher. EURUSD, this one's a little bit of a mess, I would say. So yes, in general, everything was okay for now, but you know, now we started shifting back up. So I think that what I'm going to do here is I'm going to start fresh. Whenever we have something like this, like some sort of nonsense, then yeah, I prefer to start fresh and take a better look at it. So look, I'm going to bring back this upside line for now. I do like it at this point because it coincides nicely with the 200-day EMA right here. So in a way, we still have some room before we could test this upside line. But I think that if you want to consider some lower levels, probably just wait for a drop below the 1.0760, and then this will confirm a forthcoming lower low, and we could target the 200-day EMA together with this upside line. Now, in terms of the upside, 1.0848 territory is something that I'm keeping a close eye on. This 200-day EMA is also a nice attractive option here. So basically, if we do push back above the 1.0848, I'm going to aim for the 50-day EMA only, because I want to see if this is going to start, you know, maybe providing a hold up or some sort. So maybe, you know, something like this here. This 200-day EMA could be an option. But if that gets cleared, then yep, certainly, you know, further upside could be possible. Probably more buyers could join in on a push above the 1.0905 territory, somewhere around here. Because at the same time, we would be placed above all of the EMAs, and yep, more buyers could join in. At the same time, we also could break this short-term downside line here. Not an ideal one, maybe could be drawn this way a little bit. So, you know, so yes, for now, like I said, keep an eye on some of these levels that I've just drawn here, just I mentioned. But in general, if we do stay somewhere below this downside line, then yes, more downside here could come, and we could see a revisit of this 1.0760. But if that gets clear, this will confirm a forthcoming lower low and could open a door towards that 200-day EMA together with this upside line taken from the low of the 21st of November 2022. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your rockets. Yep, fantastic. Thank you very much for that. I really appreciate it. And I hope you'll have a fantastic trading day. If you want to catch me tomorrow morning, we'll have a look at some of these instruments, some new ones. But yeah, if you want to catch me tomorrow morning, as always, at 6 o'clock GMT time. For now, have a beautiful trading day. Stay safe. Have your stop losses in place and only risk what you can afford to lose, guys. And then everything will be fine. So thank you very much and have a nice day. See you tomorrow. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.